Rinmabang, ladies and gentlemen. I'm here all that day. We have with us Peter Pagwar, CEO at XM Australia, joining in. Welcome to the show, Peter, and always a pleasure to speak to you and get insights. Peter, with what's happening across the world in terms of China, as well as with Russia, Ukraine as well, what's the sense that you're picking up, especially because clearly, if you go to see in terms of what's happening on the bond deals, we're seeing a relentless rally that's come up there.
Well, good morning, Hiral, and it's lovely to see you, and thanks for the invitation to join you. That is such an introduction in the sense of, Russia, Ukraine, China, bond yields, US, PMIs out of Europe, and Evergrande. So the Fed, and the issue I think is one issue, and that is inflation. So with high energy costs, high food costs, high utility costs, and every other cost, and no wage growth, or very little wage growth for the majority of people, then that is surely impacting their spending, and the talks of recessionary fears are very much on everyone's radar. Many analysts are calling for recessions by third quarter, so that would be start of July. And the issue is going to be how aggressive is the Fed prepared to be to try and rein in inflation, which in turn is going to boost rates, and how significantly will they boost them, Hiral?
Right. So overall, what's the sense that you pick up? Because clearly, if you see in terms of moving from inflation, as you mentioned, yes, is a key concern. And with what's happening in terms of crude prices, that seems to be adding to the concern as well. So how are you expecting Fed as well as the other central banks to actually react to this? Because we already had, Fed chair came out and said 50 basis points hike is what is expected. Do you think that's something which is warranted? And do you think that the economies, especially the developing economies, will also take it well?
First off, let's address the energy prices, of which have been parabolic, and we've seen such incredible volatility over the last, say, 3 to 4 weeks. And I can't believe that you hit a 139 or nearly 140 handle, then it collapsed all the way under 100. Now it's back at 120. This is Brent, of course. So the price swings are just absolutely monstrous, and no analyst in the world, hand on heart, can say this is what's going to happen.
Right. So Peter, clearly, in terms of crude, then where do you see it moving? Because initially, when it started to rise, there were conversations that it could balloon to even say $200, $250 per barrel. But if that happens, that's not a sustainable number that any of the economies will be able to actually, probably digest. So once it even crosses those kind of numbers, do you see it coming back and settling, say, to $70, $80 per barrel in the next, say, 2 to 3 months?
I would think so. I wouldn't be surprised, but I'm not sure how long this projected or protracted situation between Russia and Ukraine is going to last, and all of the components of that, Russian oil, Russian gas, what's happening as far as the Saudis and the Houthis, what's happening from geopolitical concerns, Iran and the nuclear deal. So all of that needs to also be addressed as far as price points. And the overall appetite for crude oil consumption and energy is increasing. So you would like to think that it'd get back to that $60 to $80 range, but it may be a little bit harder to achieve that because of the current landscape that we're playing in, and the uncertainty of the Russia-Ukraine situation, and many other components of global uneasiness and geopolitical concerns.
Right. So with all of this, clearly, if you see, gold has outshined its safe haven competitors as well in the past week. Do you think that's the space to be in, especially if you look at gold as well as silver for a short-term period? Because later on, there is a possibility you could see some bit of a downtake coming in?
Well, you may see a downturn, but I think that any prudent investor, and certainly the appetite of the retail land across Asia and certainly India and the Middle East and Africa, is one to hold gold. And it seems to be very much a part of who we are and what we are. So inflationary fears, currency volatility and uncertainty is a wonderful attraction to store gold or hold gold, and certainly silver. And the feedback that I'm hearing on the street is very aggressive buying of silver, physical silver that is, and physical gold, but more silver. And I think that that appetite not necessarily will diminish over the coming months. If anything, I think it will significantly increase. So there's the story at the moment. And Haral, I think that I wouldn't be surprised to see prices up from these sort of levels that we're currently experiencing for many, many years ahead.
Right. And simultaneously, Peter, in terms of the stock markets as well, if you see the kind of recovery that we've seen in the last 1 week, I mean, it's really surprising to actually understand as to what is actually causing this kind of a rally to come in. Now, firstly, how are you looking at it? Do you think this is just like a breather that we are seeing, which is causing this rally because of the kind of dips that we saw on the back of, Ukraine, Russia? And from here on, there could be some bit of stability, but not really major ups and downs or major gyrations that could be seen over the next 3 to 6 months?
Well, I think the first thing is we've got to be very mindful of what we experienced as far as growth from mid-20 to the end of 21 was extraordinary. So there's the first point. Second point is that it was probably exhausted as far as growth, and it had a breather, and it certainly gave back some of those gains, but not significant when you're looking at that 18-month time horizon. And the market became choppy. It also entered a protracted period as far as or a new situation that really created a lot of fear into the market was the Russia-Ukraine situation. And also you had energy prices going parabolic, and many stock traders and retail investors headed for the hills and realized that they probably was a time to not be in the market due to volatility. And how it looks going forward is one of depends on the market you're in, location wise. Secondly, what's happening with the signals as far as fundamental news, recessionary fears, high inflation, PMIs, and what the actual growth forecasts are for, say, UK, Europe, depending upon the exchange that you're trading. All of those need to be, I think, identified and appreciated, because these are certainly unusual times.
Right. And overall, the next big event right now we're looking at is the NATO summit in Brussels, today. What is the kind of outcome that you're expecting from that end?
From which one? Sorry,
the NATO summit.
Oh, yes. Well, I mean, what we're looking at, naturally, you've got to take on board what the consensus is saying and what analysts are reporting. Everything comes down to interpretation, sentiment, and genuine or realistic confidence of the market. So I think that, like any market or any particular concern or summit, you're going to think, right, what are the key drivers? What are we trying to identify, and what are we associating with? And at the moment, I think many analysts and many traders are looking at a global picture to try and get a real interpretation of what's next. Last week we had rate rises. This week we've got large amount of data coming through as far as PMIs, and certainly we've got concerns as far as the ongoing tensions from an energy perspective. So I think that at the moment that's enough to really consider to appreciate what those components can be to a market.
Right. And with all of this, Peter, how are you expecting the dollar to move? Because with that, if you go to see, especially in terms of the yen as well, clearly yen has been a safe haven, in terms of these kind of geopolitical crises. And the way the currency has lost more than 5% against the dollar in the month of March itself is also giving us some indications. So if you have to look at the dollar yen, how are you seeing that relationship?
Well, what we've experienced over the last maybe the last 6 to 8 weeks has been dramatic for the yen. And, we were at that 110, then it hit 112. Everyone was saying it's got a 115 handle. Then that was revised up to 118. Now we're at 121. And I think that there's a degree of pessimism as far as how much further the dollar can appreciate in the short run, with comments coming out of the Fed, and how much more structural weakness can you see for the yen. And maybe you're going to see a 123, 125. I think it's achievable. I'm not suggesting it's going to happen immediately, but we've got to be mindful that we've seen such big moves over the last 4 to 6 weeks, and especially this month, that is very unusual for a currency as heavily traded as the yen. So I wouldn't be surprised to see further softness.
Right. And overall, if you see in terms of the UK spring budget as well, what are you looking at on that front?
Well, I'm conscious as far as Mr. Sunak's comments. I'm interested to see what's going to happen as far as the PMIs coming out, and they'll be released over the next 24 hours. So there's, or shorter than that, probably the next 12 hours. So there's the first part of the journey. I want to see inflation. I want to see what the rhetoric is moving forward. Do we continue to see monthly rate rises for the pound, or for the bank, from the Bank of England? And again, the general theme of how the UK economy is motoring on after its first quarter of 22. So leading up to Easter, it's one of reflection. If the numbers are weaker than expected from a PMI perspective, then that could dovetail into the next part of it, which would be a general softness. If that continues to be across the Eurozone, everything looks like you could face some form of maybe a recessionary, that last couple of weeks of June, come early July, could knock on everyone's doorstep. And that's something that people have got to be conscious of, because if you're going to see rising interest rates and you see soft growth, that enters a stagflationary period, and that's not a good situation for any central banker to find themselves in.
Absolutely. I think, at this time of the year, there are so many moving parts across post-COVID. So to actually have a firm view in terms of what's going to happen is something which is very unpredictable, situational. But thank you, Peter, so much for joining us on the show. Always a pleasure to speak to you, get insights. Thank you. Speak to you soon again. Stay safe and see you soon in Mumbai.
Thank you, Hiral, and all the very best to the Nirmal Bank team. Take care. Bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.